How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As you can see, it's pulling back down into that suspected PDA rate that we expected price to make a higher swing low in. So we're anticipating whether or not price is going to come down, give us a higher swing low compared to this one. It's going to be higher than that one, and push back higher and break out and take out that swing high up there. Now, could ultimately make a swing low, fail to break that swing high, and then break that swing low. So it would change back to bearish momentum instead of bullish momentum breaking a swing high. It's breaking a swing low, making us think about bearish momentum. Also, like I said, we broke that IPTA 20-day high. So it was definitely a liquidation, right? Running those stops above that high and now changing direction. We also have a potential smash candle here. This is a Larry Williams smash candle, just a little extra for those that know what it is. That's a sell signal, and it just triggered it. We'll see whether or not if it's going to trigger and really pull down deeper. We are still above August's opening price, so we could start to see the narrative of a bearish EU or a bearish euro, because seasonally the data has showed us that it's supposed to be bearish for August and DXY should be bullish. Let's take a look at the DXY. We can see the DXY is doing inverse, as we spoke about it yesterday. We said, or the other day, on Tuesday, because I didn't do a daily update yesterday. Tuesday is pulling back up. Now, on Tuesday, we talked about price pulling back up into this range here, this CIBI, this PDA, right? And it is. Now, is price going to print a lower swing high and take out this lower swing low that it's forming here? Possibly. Or is price going to make a swing high and then run that swing high, causing us to go back into a bullish momentum? And then we'll look for a higher swing low and try to take that higher. Now, we're not trying to force these narratives. We're just simply waiting. Also, many folks who know this as well, I pointed out in the channel, in the group chat, that this is a smash candle. I said that we might have a buy signal on our hand. Larry Williams buy signal formed here. So far, it would be in profit. So it's pushing up, buying at the high of that candle. Now, I want to talk about something real briefly because someone in the chat had asked me about this, about the correlation between the DXY, the bond yields, and why it's so important. So if we take a look, we'll put this side by side actually. We'll go down to the bond yields. Now the bond yields, the US bond yields, are directly correlated to the DXY. Let's put this on the daily chart. We'll zoom in. You can see it's literally doing the same thing as the DXY right now. It also created some type of CIBI recently in time, and it's pulling back up. We just had a down candle yesterday. Look at how they're showing strength to get away from this down candle. Now, I'm not saying it's going to shoot up and shoot to the moon, but notice how it's moving in tandem. Now, even if I were to put this on, I'm not sure why it's not loading. Come on, TradingView. There we go. Let's go back. DXY. New price scale. And you can see the correlation. Now, it's not always going to be 100% correlated, but there is a pretty positive correlation. As the yields go up, the XY goes up. Now, the reason the yields go up is because the interest rates. This is why I say it's really important to understand what you are doing and how fiat currency actually gains value and loses value. It is the interest rates. The interest rates are the primary driver. I'm not saying there's not other drivers and other factors that contribute to why fiat currencies gain value or lose value, but the main one at the top of the list is interest rates and interest rate differentials between two central banks. As we noticed in the last couple of years, right, with lockdowns, the pandemic, all the other things that were going on in the world, the start of wars, central banks around the world started hiking. They went into a hiking cycle. They started hiking the rates. And what happens with that? Investors are going to start to divvy up and see, okay, which central bank am I going to bank with technically, or which fiat currency am I going to bank with? Who has the highest interest rate? Because I'm going to get a greater return with that fiat currency. And dollar was one of the primary investments, or still is, because it's also the world reserve currency, people were pouring back into. Same thing for currencies that are losing strength, right? If currencies or central banks are cutting rates, what are you going to expect to the yields are going to happen? The yields are going to drop. You take a look at the Japanese yields, right? Bond yields, they've been dropping dramatically over the last couple of years since 2016. And look at what happened to their currency to now, right? Besides all the interventions, all the pump ups that we have now, right now, in the month of August and a little bit of July, since 2016 to 2024, we've seen the yen depreciate more than we ever seen in our life, right? Historical times. And that's because nobody wanted the yen because the rate of return of holding yen was pointless. It's more intriguing and more of your best interest as an investor to go with a currency that has a higher yield. So as the rates go up, yields go up, and investors are enticed to go towards that currency. Vice versa, when the yields go down or the rates go down, investors want to leave that and seek other better opportunities. It's bigger than what we think. A lot of people think it's just price action. This is the true backbone to why currencies move in the first place. It's about the rate of return, the yielding of these currencies. And if we take a look at the 5 year, very similar. Look at that. Very similar in nature. Let's take a look at the 10 year. Quick turning point, too. I mentioned this to the chat that this could be a bottom because it's forming a swing low. That's a swing low. Price gets above this high here and stays above that high. And it's still going. Now, I'm not saying that this is going to continue to fly to the moon, but this was definitely an idea or a signal that, okay, price action, price in general, the algorithm, the market makers created a swing low. This swing low is either going to be the start of a new leg higher. There obviously are going to be signs for the continuation to get in trend if it is truly going to continue trending up, right? Same thing for the 30 year, very similar, right? Prices pulling back up, just as so. Now, look at the DXY. It looks very similar in nature. It's still bullish too. We have 9 hours left till this candle closes. It's still really close to where the high is. It still looks like it's going to make more higher highs for the intraday. If we take a look at the yen futures, inverse, right? Look at the correlation. These things are not similarly correlated. They're positively correlated. If dollar goes up, yen should go down. If yen goes down, dollar goes up. If yen goes up, dollar goes down. That's how it should go, right? Dollar goes down, yen should go up. Inversely correlated. You can also see this is a smash candle signal, sell signal. Same thing. It's a candle that closes above several highs again, right? That's the indication. Yes, all these candles do close above highs, but price has not returned back to that low yet. So this is our most recent sell signal on the daily chart for the yen futures. And you can also see similar things with other pairs. Not saying all pairs, but some pairs are doing the same thing. We can see price is still selling off. We still have that bearish momentum behind price because price recently broke a swing low. It's probably looking to print a lower swing high. So there might be a pullback at some point, and then price is going to continue going lower. Not saying that it's not going to be bullish because I'm not saying anything's out of question or out of the doubt, but be aware of what price action is doing via daily charts. Very important. We can see here for AU. AU recently broke a swing high. We'll see if we get a higher swing low and price continues going higher. This does concern me. There's a liquidity void here. So my speculation so far is very cautious on the dollar crosses because I want to see if this is still going to push higher, push higher, push higher, or if we're going to get an S&T divergence amongst the majors and only certain pairs are going to recover and then drop maybe, or recover and continue a new trend. New Zealand dollar just printed a smash candle right here. Pretty much filled in a lot of this liquidity void, more than 50% of that liquidity void. This is the last up close candle before this sell-off. This is the last up close candle too, and then price comes in and fills within that range here. So from here to here, price pretty much covered the entire range, refilled that inefficiency in price action. Could we see price want to go lower and take out this swing low? And this is currently, again, a smash candle sell opportunity. Now, it's not that you sell immediately for that idea, the Larry Williams idea. It's not that you're immediately selling on the next candle, unless you're very aggressive. You're just trying to sell when the candle gets down here on weakness. So you're selling on weakness. You're not selling on strength, price going up. So this could be a sell signal right here on the daily chart telling us, hey, get ready. The market's going to make another turning point or another. Most times smash signals are a part of a swing point. So by making a swing high, price is going to go lower and try to get for this swing low down here. Possibility. That's if we could get that dollar strength to maintain itself. There's a lot going on with the BOJ and their interventions and them hiking rates. You saw how when they hiked the rates, it gave a significant boost to the Japanese yen. There's no question about it. Yes, we know that they were intervening as well, but those rates, as soon as they started moving rates from a negative monetary policy and started hiking it up to a neutral to positive monetary policy, you started to see what? Strong movement, investors coming right back into this market because they haven't had the yen be appreciated or sought after in years. Yes, there are some times where the market does run up and run down. In any trend, bearish or bullish, you're going to have the market go up and go down. And even in a bearish trend, you're going to see moments where the market pulls back and then continues to make lower lows and lower highs. But this move recently, right here, we definitely know for sure this was definitely impacted or was created because of the interventions and because of the bond yields increasing for the yen. Right, the Japanese bond yields have been going up, so the same thing's going to happen to the currency. The currency is going to gain value. So hopefully I'm not confusing you. It's a very simple idea. It's very intriguing and interesting when you start to learn about these things because you start to see how you can frame ideas based on fundamentals long term. Again, if we take a step back for a second, go on the monthly chart, yen futures since 2016. 2016 is right around here. 2016 is when the Bank of Japan went into a negative monetary policy, I believe. And ever since then, it was just declining. You can see the depreciating. Nobody wanted them because they had a negative rate, which means they had a negative or declining yield. But on the flip side, instead, look at what the dollar was doing since 20. Let's go back. Go on the monthly chart. Go to 2016. Right here, what happened over time, it gained strength long term. So again, if you understand the fundamental analysis, you can start to look for position trades or swing trades, right? Swing traders would definitely benefit off of this. Day traders is too. It trickles down to all styles of trading. However, if you understand the fundamental driver behind the market, a lot of the stuff that comes out or the news that comes out, you pretty much know it's fluff and it's ignored because it's not the primary objective to why these currencies flow the way they do. Let's bring it back home so we're not lost. Let's go back to the EU. Again, we have a current smash day sell signal on this candle here. Right there, we're in a premium, so it's ideal to sell. Now, if selling is truly going to happen in the near future and this market is somehow going to find its way down here, I'm not saying it's going to go down in a straight line, but if the market's going to find its way down to these levels again and back down to August opening price, it would be the most simplest thing for you to do to sell after up candles. So far for the month, we had 2 up candles. So you could have sold after this one. You might have taken a loss the next one. You could have sold after this one, and it looks like you're going to start being rewarded here. Selling, selling, selling. Price may print another up candle. If it is going to be, like I said, if you are taking the stance of being a seller, the most simplest way to get into this trend is to sell after up candles. The same thing vice versa. If you're looking at any pairs and you have arrived to the narrative that you think this thing is going to be bullish for the next 4 weeks, the next 5 weeks for the month or so, wait for down candles and buy after it. It's a pretty no-brainer, easy way to get into the market. Just take a look at this leg here. If for some reason you found out and you speculated the market was going to be bullish, notice what happens after down days. Do you see that? Eventually that trend would cease to exist. The market's going to change trend. But I'm trying to show traders in the community simple ideas to get into the market. They don't have to overwork themselves or overanalyze intraday, look for 20,000 PD arrays in a lower time frame, and none of them work, when you could just simply buy and hold and sell and hold. So selling after this up candle clearly would show results. Intraday might show another story, but selling after this up candle was probably ideal if you are looking for EU or Euro to decline and dollar to appreciate. Let's see if we get a higher swing low and if that higher swing low actually holds up. Peace.